Hey everybody. Okay, so we're just going to take a brief look at Bitcoin. It's a Monday. The new monthly candle opened a few days ago, and to be honest, there's not much changed from what I spoke to you about yesterday. Um, so the monthly, previous month, we dropped in, we took out these lows. We're going to mark that up. We took out July's lows and August lows in September. And if we make that into a high-low level, excellent. And now we've just started trading lower off the open. So let's mark up the monthly open. If I drop this to maybe the daily is a better idea. Can probably pull off that level now. I don't know if we need that one. We don't need that one so much. So we're going to just add that monthly open, which is here. So we're trading below it at the moment. Oh, wrong one. Monthly. Now, H1. So we have our monthly open. We traded lower, broke the level, our key SR level here, which is currently holding price down still. So you know that was a key level. It's continuing to be respected. Now, the weekly opened, pushed up, retested, bounced, but we're still below that level. Now, what we have done, which we didn't do on the stream yesterday, or it happened late after, it happened actually, it was 5 o'clock this morning, 6 o'clock this morning, is we took out that low. Which, if that was what it wanted, then what should it do now? Doesn't need to retest the low, does it? It will break the level. So it's retesting this level for a third or fourth time now, right? So what we want to see is same again, break the level. If it breaks the level, stop loss, we're in. Okay, and then this is the failure pattern. This is the stop run into support, break key SR. Then if it breaks monthly open, we can add again targets here and here. But we're going to mark them up nice and cleanly using previous weekly high and low. So we have previous weekly high is so 1, 2, 3, 4, 5, 6, 7. So previous weekly low is over here. Try and look at that mid-range. Previous weekly high there. Okay, so that comes in nice and tight on the monthly open, so that is a key level, but we're going to mark these out properly. So we have previous weekly high, last week's high here, and last week's low in here. So that was the weekly range. So the high came in on Monday, the low came in on Tuesday. Last week's low there. Okay. Now, mid-range. The reason we use the mid-range, it's not an actionable level. It's roughly in there. Okay, so we'll mark this out. But it just gives us a it kind of allows us to isolate price into ranges or areas where we can trade between, and we have an idea of targets, and it's very, very useful. I explain in a moment. Um, that's it, perfect. So that comes in nicely on top of the monthly open, which would be a resistance, or if it's retested, it'll probably give a reaction. And we know usually we put the high, the low end of the month and the first week, and we're still in that first week. Now, if we get some price action, if anything continues like this, and then we get the break, and then the break, then we can start to assume the low could be here. Okay. Of course, the reverse could happen. We could rip higher, take out the weekend's highs over here, and then start to break down. And then once below the weekly open, you could probably assume the high of the month was in here, and we can send it lower. Now, just want to go back to the mid range. That was important, or that is important because what we use it for is to isolate price into an area of targets. Now, we, we know that from our stats and our data, we take out, and you can go back test this. You can go and look at the weekly candles. We take out the previous high of the week, or the previous low of the week, 80 to 86% of the time. Okay, it's only about 14 to 20% of the time we don't take any out, and we have an inside week. And it's only, I mean, it's a very low percent of the time we take out both um, in the same week. So it's really important. We have these. We're able to isolate price, and we know. Okay, currently what we're looking at is if price is below this 50, then we're going to target last week's low. Okay, if it starts showing strength and we're above the 50 or the mid range, then we can reasonably start looking at targets previous week's high, swings into liquidity higher. Okay, so all it does is it gives us a nice framework to work with, and it allows us to each time we come back to the chart to know exactly where we are and what we're looking for, and have kind of soft or loose invalidations. And what I mean by that is if we if we start trading higher and we're in a long and we're targeting, okay, we're targeting a swing at last week's high because we know the percentages, but it hits this resistance again because this was a key resistance, failure, resistance, okay? It hits this and we don't take any profit and then it collapses, then we're back below the mid range. We know we have to abort mission, okay? And that's off the table. And then we start saying, well, okay, it didn't quite reach. Let's swing this short. That could have been the stop run of liquidity or whatever it wants to be. Okay, so it gives us a nice, it gives us something to work with, and I think that's been really important for me over the last 4 or 5 years. Now, so Bitcoin, the plan is simple. Okay, break above the level. That would be the higher risk entry, stop loss here, a back test on that pink, break above, add, okay, target 1, 2, okay, um, failure, okay, above there and back below the pink. If it took out weekend's highs, which are in here, then it, I mean, if it literally done as that line has done, which would be sweep them highs and then back below pink, then all bets are off and we're swinging this lower with our risk there. So that's the plan for Bitcoin. I don't have an opinion on Ethereum yet. Not too sure. We're going to wait for the market to give us a Monday range to work with, and then I'll be back. I'll be back in Discord, and I'll see you later on this evening. Goodbye.